Hey guys, welcome back to another Tuesday Live with Jen and Joe and Creative Finance Playbook. And today we've got some super special guests, Paul and Diane Ritter from ScreenTheTenant.com. You've probably heard us talk about them a million times. Well, they were nice enough to come back onto our podcast again to talk about all the things, right? So first of all, I want to say thank you guys so much for coming on to our podcast today.
Well, thank you for having us. We're really looking forward to giving some good education and looking forward to talking with you guys. And it's been too long. You're right.
It has. And their services come highly recommended. How we even found who Paul and Screen the Tenant, Diane were, was with Ron the Grand. And I'm watching these videos of Ron the Grand, and there he is chatting about, I've even seen Paul on a bunch of his episodes, and they're talking about ScreenTheTenant.com and how important it is to find the right renters, because Ron's the one who talks about rent to own, lease options, right? And how great that was. So we knew it was only a matter of time before we were going to implement this strategy into our business, and it did really, really well. And that's a huge part to Paul and his team. So once again, thank you for coming on. So I got to say, it's obviously been some years. Have you, you didn't just start in real estate recently, have you, Paul?
Oh, no. I started this back in, I've been a student of Ron's like forever. I've been doing business with Ron since 2012. And if you're going to be doing business with Ron for over 12 years, then you must be doing something right. You know what I mean? Because Ron would have kicked me to the curb a long time ago if we'd have been doing something wrong. You know, he's a straight shooter, that Ron LeGrand.
Sure.
Anyhow, I've been doing it since about 1997 is the credit repair business. The screening business, actually, Ron and I sat down and we brought that into play about 2012. So we brought the two items together, making what I call the ultimate lease option exit strategy, bringing that to life around 2012. And we've been refining it, my wife, Diane, and I, ever since. And so that's kind of how this has come to pass.
So for some of the folks that maybe they're just hearing about this rent to own or lease option for the very first time, what is that? Can you explain?
Ultimate lease option exit strategy?
Yeah.
So really it's a blending of the two companies. So you'll find your screening companies out there, independent screening company, and you'll find like TransUnion, Smart Moves, and so on, and you'll find your credit repair companies out there. But when you put the two together, you create an alternative that has the best of both worlds. And when you do it in a manner in which it's designed for this industry, for example, with the credit repair industry, if I was going to do standalone credit repair like Lexington Law and many of the other ones out there, I wouldn't have an end date to whenever the people engage in the service. And that's a big problem for a real estate investor who's trying to cash out your tenant buyer. If you don't know how long the contract should be for, because you don't know how long they're going to be in credit repair, it's a setup for failure right out of the gate. And in the world of screening, we bring into play a concept that no other screening companies have, which is a debt-to-income ratio analysis. And what we'll do is we'll figure out, we get all the debts from the credit report, and we put them on kind of a spreadsheet looking like thing, and we calculate out, it's perfect form to play what if. What if the down payment were higher? What if the terms were different? What if they paid off some debt before they applied for the mortgage? And so we'll go through and we'll coach the tenant buyer. So we do this all in a Zoom session with them. So it's a really complete program designed to successfully cash out your tenant buyer. And so without these extra intricacies designed for our business, it's kind of, at best, you could just fit together some things. But this complete scenario, and then whenever Diane puts her blessing on it, and she brings in the criminal background check and the Megan's Law report. And go ahead, Diane, tell them what else you do aside from what I'm mentioning here to bring this whole thing together.
So we do the things that Paul already mentioned. But we also bring in what feeds into the DTI is their income, their credit reports, and we actually just started doing a
action plan
for their credit report. So they'll get, it's a little overwhelming when Paul talks to you because there's a lot of information at one time. So we pulled that together onto a little check sheet so that people can say, can see going forward what it is they're supposed to be doing on their end, because it really is a two-way street.
Wow, that's really awesome. I feel like in this day and age, like the checklist is overlooked. So to have that for people, just keep it simple, right? Because there's a lot of moving parts. They're so excited to, have this opportunity to move into a home. But like you said, Paul, like we want to set them up for success. And so what better way than to start them off with an easy checklist like that? That's incredible.
Oh, that was Diane's brainchild.
Thank you, Diane.
She pulled it out, and then she made it work. She made it look beautiful. She put the logo on it and everything. And it's just, she says, well, what if on this action plan we do it in a way where we check in with them every once in a while and check off whether or not they've done certain things. Like, for example, if we say you have to build new credit, and then we looked and we're doing the credit repair for, say 6 months, and 3 months into this thing, they don't have any new trade lines on the credit report. Well, now we start to check into that. And she's following up with them, and she's even putting it together where now the futuristic model is we let the real estate investor know that they haven't followed up with certain elements in the action plan.
Which is great. And this is where I think it's been so helpful, because when we started, we had single family rental houses. And what we were doing, we were just typical landlords dealing with the tenants, the toilets, the phone calls, all of the things, right? And then once we learned about this strategy of doing lease options, rent to own in 2016, we had some houses we were planning on implementing the next summer when all those leases became due. And when we did, you guys were a huge impact to helping us, because when we started offering rent to own, we got a ton of people reaching out to us, right? And the one thing that was super helpful for us is when we did find the right fit, somebody who wanted to do rent to own lease option, they had some money that they could use to put down as a non-refundable option deposit. But then the next thing was making sure they're the right fit. And there's always one I remember that you guys helped us with. The gentleman got a car accident, and he got a really big settlement, and he was looking at one of our houses, and he had a good sized chunk to put down on the property. But then after looking at his income and his debt to income, he would have never qualified to even handle the monthly payments, because his payment to income number that ratio was way off. And so by having a screening service where, and I'll tell you, the pages you give us like close to 100 pages, but that snapshot page in the beginning, which gives you the summary, it was really helpful. And this was the greatest conversation I had with him. Just explained to him, I don't want to take your money. I want to be able to get something that's affordable. So we need to find you something more in your price range, right? That could work out. And I will tell you what, every single time he was out driving, and if he found a for sale by owner, he would text me, then I would say, hey, could this be my new house? And he'd send me leads. And I'm like, if I buy the deal, maybe we could work it out. So it was really neat to be able to ideally help people on the path to ownership. And so when so many people say, well, Joe, Jen, Paul, Diane, why would anybody even do a rent to own or a lease option in the first place?
Well, I tell you, from your perspective, from this perspective of a real estate investor, and correct me if I'm wrong, isn't it the most profitable exit strategy of all the exit strategies? Because you can get money now whenever you move somebody in on the down payment. You can get money over time because of the variance in how much money you pay for the property plus how much money you make on the property from a rental payment perspective. And then whenever you cash them out, you get even your biggest chunk. And so you can be so flexible with your approach. It gives you a dynamic that many real estate investors don't have. So, people, if people aren't doing business with Jen and Joe or learning from them, these are really, and here's the thing about it. It's not only the most profitable, it's the best one to do, because it's the one that makes you feel the best. If you're going to church with these people and your kids are going to school with these people that you're putting in your homes, if you live in the community that you're working in, don't you feel good about making certain to do, as you just mentioned, making certain that you really have their best intentions in heart. You're not trying to take their money and go to Tahiti. It's more in line with, the best for all. You win, they win, everyone wins. Even the banks win, because the banks get their mortgage later on when the people are in a position to be able to afford the house. And the people have been trained who are going through our program. They understand what to do through the checklist, and they understand how to get themselves in a position. And sometimes they have to learn some of those things over time with the credit enhancement. And so we walk them through that stage as well.
Well, and the one thing I love about your snapshot in the very beginning, where the one thing I think is so great, it will say they're not there yet credit wise, but they will be in 6 to 12 months. Or I just got one back from you guys the other day. It was 18 to 24 months, right? Great person, great job, just had something really bad happen. And their credit took a dive. So within a year and a half, they should be able to be mortgage ready again, unless they do all these other things, which we advise not to do, right? So the goal is to ideally help them get to the path of home ownership. And don't get me wrong, does it always work 100% of the time at the 18 months? Maybe they do need a little bit longer time, and that's okay, as long as they're working on the path to ownership and they're working on that. That's it's super helpful.
Yeah, we call it the coming to Jesus conversation. So we're telling them, hey, listen, these have been your patterns in the past. Now, first thing I need to know is, are you going to have any more late payments on that automobile? That bleeding needs to stop right now. If you don't already have that thing on automatic payment, put it on automatic payment. So that way that payment can't be late, And then after that, the building of the credit, age of credit, mix of credit, balance limit ratio, all the relevant criteria that contributes to the score. We're playing in all those sandboxes, unlike our competitors who only do one thing, which is work on the history of the credit profile. No, that's not what makes up a score. It's all the relevant criteria. So we're in that sandbox. And then from the screening perspective, again, what Diane does is magical, pulling the criminal background check, Megan's Law report, marrying that all together with like you said, 100 and some odd page. Some of them are that long, truly, and some of them are not. And now we're starting to be able to entertain 3 and 4 applicants at the same time on one application too. So, because it's not always just a husband and wife. Sometimes they have kids in there that they want to have in the house and help them qualify for the house too. So we have that flexibility of working with them.
Well, and the neat thing is you actually, because of your services, and first they were screamed through you, but because of your services, I think we had a few buy their properties just last year in 2023, finally got qualified for a mortgage, right? So yay, they did buy the house, which is great. We turned another renter into a homeowner, great feeling. Yes, we did get a big old check at the end. So people always say, well, I lost a door, but if you saw the side of the check, maybe that's okay. And you could go buy it, reinvest it into more deals, right? So that's what's really neat. But I mean, helping a mortgage person, get another mortgage to do. So it helps out so many people along the way. It is a really great thing. So when it aligned for what I love to do is help people. And if you could help people and make a whole bunch of money doing that too, that is right up my alley. And with your services, we're making sure we're also trying to set them up for success and as well as us for success too, because ideally, I don't want to just put anybody into the property who maybe just wants to rent to own. Like, it's got to be a good fit for everybody. So are there certain things that you would say, like, hey, from our experience, like, these are the things we really think to look out for or look for?
Things to look out for, like what, red flags?
Yeah.
Well, if someone has a windfall of money, tax refund, and inheritance, right? And really they can't substantiate. In other words, they didn't save that money. It just kind of fell upon them, an insurance claim or something that settled. And so they don't have the pattern to be able to save the money over time. That's kind of a red flag. It's not the death sentence, but it's something to look out for. So because you want to, in our coming to Jesus conversation, we're wanting to train them. Hey, listen, you want to save money over time, because people think when they think of rent to own, they think of rent, okay? And then, oh, by the way, I might have the option of owning this later on. But when a real estate investor thinks of rent to own, they think of ownership right out of the gate. And, so we need a down payment, a non-option, a non-refundable security deposit. So it's a different thought process on both sides as far as the initial money that's going to be put into the transaction. So from their perspective, they call it rent to own. We call it lease option deposit or lease option. Yeah. Lease with the option to buy. So whenever they're going through us, we're educating them, how that process works, because, hey, Jen and Joe or XYZ ABC real estate investment company, they're tying up their property for you. You're the only one that has the exclusive right to buy that property. And then there's value. And in that value that they're offering you, that's why they're asking for a larger down payment or a non-refundable option deposit. So people have to come to accept that. I get it all the time, guys. I get like, well, is 100% of my payment going to end up going toward the down payment? Not 100% of my rent payment going to go to the down payment? I say, well, you know what? If yours does that, you'll probably be the first person, I've done thousands of these, that has ever had that. Because when you read about it, if you go online and you say, well, I want to buy a rent to own, that's what you'll get. A lot of people write that in there. They'll say, oh, 100% of your down or your rental payment can go toward the purchase price of the house or toward the down payment. And we all know that that's not how, and essentially you're living rent free. So,
well, yeah, and that's what I think that's a misconception is when we do rent to own, the rent just covers rent.
Right.
Period. And if the rent in this property is $1,500 a month, that's what you're going to get to rent it for. But that deposit you leave is the non-refundable option deposit, like what you mentioned. That's to hold the reserves and the rights to be able to buy that price for this many years at that price. And that means that us as the owner of the property, I can't go sell it to somebody else. The guy down the street or the family down the street says, hey, I want to buy the property and I'm willing to pay way more, right? Like we can't do that because they hold the option to buy that property for a certain amount of time. So there's value on both sides of it. And I think, which is the greatest thing that I've noticed, is when somebody can move into their future home now and pay rent until they're able to get qualified for a mortgage later on, that does really benefit them. They could paint their kid's room a color, they could put some plants outside for the landscaping, and they're not typical renters. They see it as going to be a future home, and they really appreciate the opportunity, but they also treat the property, from what I could see, and not every single time, believe me, but most of the time, they always treat it exceptionally well. Yeah, like a home.
It's a higher quality. A tenant buyer is a higher quality than just a tenant or a renter. You're getting much better. And here's the things, people don't think about this. Whenever you're thinking, should I rent to own or should I just sell this property? One of the things, and you touched on it kind of a little bit before, you can build your buyer's list along the way. For example, I got a house and I have 3 people apply for it. I can't give the house to all 3 people. So I got 2 other people who then want to own that house, but I couldn't give it to all 3. So what happens with those other 2 people? Well, in my world, I let them know that, hey, listen, I'm not the one who makes the decision on the house. However, even if you don't get the house, you probably should continue with the credit enhancement, because no matter what, going forward in life, you're going to need to have this. And people typically, they're very kind about that. They'll say, oh, yes, we'll stay in your program. In addition, then what happens is now that those people are on your buyer's list. You have 2 people actively looking for a property in the north side of town, 3-bedroom, 2 baths, similar to the one they didn't get in. And now guess what? You can go and look for properties in that area. You already have 2 people on that buyer's list. And now when you go to take under contract a house like that, you can sit there and say to the owner of the house, hey, listen, I already have people that are interested in your house. So it's a way of building your buyer's list using the whole rent to own concept is gives you that. If you don't do it, if you're just renting or if you're just selling outright, you don't have that option.
Well, and I think that's the key to it too. We've actually started a whole Facebook group back home for all the folks who are like, hey, I want this property and you only have one, right? So I always say, like our Facebook group, stay tuned for the next one. And you build a following. And if this is something that you end up doing, we've got a sizable community now of people who are looking for these houses. They want to actually do a rental until they could own it down the road too. And so, we try to get them all together. You categories like what school districts they want to be in, because sometimes that's a thing.
Right. Yeah.
And so if I find that property that's in the school district and I already know I've got 4 people who are interested in that property, when I do talk to that seller and I am making the deal with them saying, hey, I have a few people who are already interested in moving in pretty quickly, who are going to plan on owning it down the road. So, and I think that makes the deal making the deal sometimes a lot easier too. And I think that's what you were kind of getting to.
Right. The whole thing is the whole process itself is infectious, where you can get more properties under contract because you already have tenant buyers already in your coffer, and you're ready to just go ahead and put more people in houses. So it grows on itself.
So you've helped us many, 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 many times, and you've also helped out. You've been nice enough to help out a lot of the clients that are in our coaching program when they've got a property and they're going to do the same thing. And some of them do Airbnb, but some of them really want to do this. So when they do and they have that renter, we always send them your way. But for somebody who hasn't done one of these yet, Paul and Diane, what is it like? Like when they're first getting started, they find the renter, they did the walkthrough of the property, and they say, yeah, I want to do the rent to own or the lease option. We have this specialized, what we call the Paul link. But what does that process look like, and how did somebody get started?
Are you saying from the perspective of the tenant buyer or from the real estate investor?
I'm the real estate investor. Yeah. And I found somebody who wants to move in. How do I get this process started?
So you're gonna love this. The application piece of this. So you could do your own application, but the application, we've made it really simple, and we're basically giving you our application with your name on it. And it's customized and branded with your name on it. So the people can't go in and change. They can't even change your name. They can't misspell your name or put in the wrong phone number because it's already branded. The application is branded to you. And so we call that process, in order for us to develop that application for you, the registration. Registration is free for anyone who comes to us through this means here, through working with us for Jen and Joe. So to register with us, Jen, you might want to flash that up on the screen if you have it. There you go. Text the word register to the phone number you see here, 877-952-7979. Now, that's going to not complete your registration. That's just going to get you the form that you need. When you do that, there'll be a link, and that link is a form. And the form asks you simply like 6 questions, like what's your name, your phone number, your email address, and a couple other questions like the public viewing email address. What do you want the public to see, and what do you want us to see? What phone number do you want us to contact you on? What phone number do you want the public to see you on? So whenever you complete that form and you hit submit, a lot of things are going to happen. You're going to get like 3 videos. One video, like what happens behind the scenes, like what we do. So the process of registration will teach you many of the things we've talked about here today, but even more in more depth. And it'll show you what those forms all look like. And it'll also show you what the tenant buyer's experience is. And as a tenant buyer fills out that application, what they see and what is expected of them to complete the process. Because once they fill out an application, it comes to us. And when we get it, we send a copy of it to you right away, let you know that person enrolled or registered, or a person filled out an application on your behalf. And then what happens from there is Diane gets on the phone, calls them up, and gets all the income documentation, gets them on my schedule. And at this stage, I'm the only one talking to them. We don't have a sales force that's talking to all these people. So they're going to get me. They're going to get me talking to them about their credit report and about their debt to income ratio. So it's a beautiful thing, because I've been doing this since, as I said before, 1997, 2012 was when the screening piece came about. So I talk real estate investor-ish really well, because I'm a Ron LeGrand student and been doing this quite some time. And I know the things not to say, about ownership interest in the house and how to basically phrase everything correctly. So that process, we handle 90% of, on the buyer side, we handle 90% of it. All you really need to do is register. And when you do that, again, all those videos come to you. And the one other piece I want to make mention to is when you get the link, that link that has your name on it, it'll say apply.prequalteam/your company name. That link, I would click on it to see what it looks like, number one. And then I would put it in my phone. What people do is they take their phone and they put it in like the templates section. So that way they can be talking to somebody and they can say, oh, here, I'm going to send over my application right now. And they hit a button, it comes over, and then the people, oh, yeah, I see your application. I see your name on it, because now they're assured that the application came from the right place. They're filling out the right thing. It's not some form that's going to try to just extract information from them. They trust giving their social security numbers and all the sensitive information, because they know that application has the right name on it. It came from the right source, and everything happens all at once. So, the system is pretty well thought out, and it's a great experience for the tenant buyers, and it makes the real estate investor look really professional because of all the automation behind it.
Well, and I have to say too, like, you just took so much stress and pressure off of me. Like, I know Joe had a little bit of the finance background, credit repair, like, just knew the ins and outs from a previous job. But I didn't really, like, I felt solely responsible. But like, when you're building a real estate business and you have people like you, Diane and Paul, like, on our team to be able to help our tenant buyers out, like, it truly just was a breath of fresh air and really gave me that strength to move forward confidently, because, like, I didn't really know all the missing pieces, and you don't have to know every little thing, right? You just have to surround yourself with the people that do. So I just want to share that, you know, when we first started this in 2017, totally thought Joe was crazy, but then we got to meet Paul and Diane, and I was like, okay, the pieces of the puzzle fell together. So that's why we're so passionate about bringing you guys on today to share with our community, because it can be overwhelming if you've never done a rent to own before. So
the other thing I want to say that is that we keep you abreast, the real estate investor abreast of the screening the whole way through. So when we get it, you'll get a copy of it. I'll tell you we're working on it. When they register, whenever they get on Paul's calendar, I'll let you know that. So you're kept abreast the whole way through the process. It's not like you're left hanging.
Oh, you guys are like right on top of it. I get an immediate email that somebody applied, and then I get another email that the scheduled Zoom is happening, and then the next one with all of the paperwork. So I love that, because I'm very type A. I want to know every little thing.
Mm-hmm.
That's going to be really important to understand, that it's not a push the button and then the computer makes the decision process, in which it takes 3 seconds. It's when they submit the application, we have some work to do on their, like, coming to Jesus conversation, the Zoom session, and all that. So we're educating them, and again, they're going to pay $50 per person for this. It's not like it's a break the bank type thing. I mean, we could easily be charging hundreds of dollars for that screening process itself, but we don't. We like to keep the entrance level really low, about what they typically pay for a rental application anyhow. So we keep that low. And in our world, we make some money on the credit repair side. We're not making any money on the screening. Screening is not how we make our money. $50 a pop. That's not a whole bunch of money. That just barely pays for our time to do what we do. So, just so you know, the screening business feeds the credit repair business, and that's kind of how our business was born from that perspective.
Mm-hmm.
Well, and I got to say, when we first got started, I would have the box of paper applications at the house. People would come in and they'd fill it out. But then, like, if I was at work and they went to the house, I'd have to, like, scramble there because they had, like, sensitive information on it. And it was a lot, right? And people would steal the pens. There's no pens here. It would just happen.
Or they'd hide their application in a cupboard.
Yeah, and then I'm playing, like, hide and go seek. No, not that cupboard. It was the one in the top shelf. Like, so it was, like, just a lot. And then the fact is, and I don't know how long, not very long, but then we learned how we could have our own registration, which once you have it with you guys, right, you have it. So I don't have to keep on re-registering. I saw that was one of the questions. Mm-hmm. So once I have my registration set with you guys, it's the same Joe and Jenn link every single time. And every single time I have somebody who wants to do this, this is the link that we send them. Now, I will tell you, when you send that link out to somebody who's a potential renter who wants to get into this program of yours, you have to coach them, right? So I'm going to say, when I send you this link, fill out this application as fast as you can. And then once you do, somebody on Paul's team is going to contact you. And the faster you answer that call and get them all of the information that they're going to need from you to collect, the faster I'm going to have your answer. So if you see a call coming in and it's their team, answer it. And if you didn't get it, call them back right away. Get them the information that they're going to need, so then we can make that decision quick, right? And
I love that. The only thing I would add to that is expect a call from a 724 or 412 area code number. That way they know, that that's going to be the screening people.
Write that part down. Right. Yeah.
So writer downer. Yeah.
Yeah.
But that's the key. And then once they expect that call to come through and they get on that call. I mean, geez, they get these reports back. What's the typical turnaround time? I know the answer, but I'll let you guys share.
Well, we've had them go as long as 2 weeks, but typically they're in and out within what, a day, 2 days, 2 days. Yeah.
Yeah.
I work as fast as they do.
Yeah.
As quick as they get their information, and that's how quick I turn it around.
Maybe that's why we get them back so quick, because we kind of coach them on the front end and you take care of your end. And it's like the hands-off process.
Yeah, and I've had some people, well, they're asking, all my credit information. Well, yes, we're looking to place you in a home. We're just curious about some things here. And so you need to let them know, yeah, but there's a little prying, but it's honestly to set you up for success. We really need to know what we're working with so we can have a game plan, like Paul said.
Right.
Yeah, and another thing is we're not asking for a hard inquiry on the credit report like a lot of companies would be. We're using the Credit Karma or freecreditreport.com account.
Mm-hmm.
So they don't even have an inquiry. And if they're real sensitive about their information, they can give us their login credentials and then change it. We'll be on the phone with them and say, okay, so we've got what we need. Go ahead, you can change your login credentials. So we don't have perpetual use of their credit report. So
right.
If they're in the credit repair process, then we do want to have use of it over a period of time. But yeah, there's safety valves built in there. And if you ever looked at a Credit Karma account, it doesn't even have account numbers, on there. It does have history. It does have the balances. It does have, what type of collection charge off or judgment or late payment, has all that stuff on it. So it has a wealth of information. The scores aren't 100% accurate, but, they're close enough to FICO. It at least gets you an idea. And by the way, as a special, or like to offer to anyone in the audience, if they need you need your own credit repair done, please, whenever you type register to that number right there, there'll be a box in there whenever you register that you can have your own credit repair done. I'll set up a session for you, and there'll be no consultation fee or charge or anything like that.
Oh, that's awesome. Thank you.
Well, and you know what? That's the whole neat thing about it. As I remember from our podcast we did together years ago, what you guys really said that stood out to me, because I worked for a car dealership, so I didn't really know credit repair, but I was in the finance office, so I pulled up thousands of people's credit reports.
I misspoke.
And I knew how to do credit, so I figured out repair, so it wasn't like, but what you guys do is you actually get them to be repair for mortgage ready.
Yeah.
Which is different than just fixing, like, oh, you paid that old credit card late a couple of years ago, let's dispute it, or anything weird like that, right? Like, you actually are trying to attempt to get these folks to be mortgage ready so then they could buy a house in a few years, which is different than just fixing credit. So that was the one thing I really stood out to me. I was like, you're not just trying to fix credit, you're trying to help people be mortgage ready and own a home. And that's really neat that you guys get to do that.
Mm-hmm.
Credit building, is a major component of that. It's 30% of your score. I mean, 35 is history, going after all the negative remarks on the credit report. But if they don't build credit, we ask them to build credit, FICO has nothing to hang its hat on to give them a score. And their score may come back to be a nothing, or, if there's nothing on there, it'll register as a 4. So if you ever seen a credit score that says 4, that's what that is. They don't have enough credit in order to even register. So the building of the credit is a major component. And then we'll teach them things like, oh, you know what? Somebody else that has a card that a mother or a parent or something has a card, and you can be a co-authorized user on that card and pick up all that history that person has. Now, we only tell them to do that if we looked at that card and we see that there's no lates on that card, the balance limit ratio is low on that card as well, and that person's going to trust them to have that card. So all those components in place, you could pick up a whole big piece of history on a card, and so kind of marry yourself to someone else's credit just to get you started. And then that, coupled with getting your own credit cards, gets you to where you need to be faster. But you're right; it's a whole different mindset to build. Just doing credit repair is a small segment of what we do. When you talk about credit enhancement, to put yourself in a position to be mortgage ready, that's a whole mindset going forward.
Yeah, and that's really the key. So once again, these are for folks where I have a single family home, I'm offering it for rent, but with mine, I offer it with a lease option, which means they could lease it with the option to buy, but down the road, I'm going to want them to buy it at one point, right? So we need to qualify the folks before they move in to find out what the game plan looks like, when they think they're going to be mortgage ready. Paul and Diane, they're going to be the ones that help fix maybe a couple small things that's maybe broken with their credit report and things like that. And not just fix credit, but get them hopefully mortgage ready is the key in the game plan. And then as long as these renters are doing their thing, they're living in their home, they've made it a home, they're working on the back end of the credit. And this is why we love rent to own, because they're also taking care of the plug toilet and all of it. Like, I don't get those phone calls anymore, which thank you. That is the best. And then down the road, once in a while, they're going to call you and say, hey guys, I am now mortgage ready, right? So that's the neat thing about what we get to do from front to back. But I know we always run into a lot of questions about rent to own and what's the best way to do it or things like that. And guys, I'll be honest with you, I've just learned from the same folks that you guys did, which was Ron the Grand. And he really walks big onto the best way to buy real estate is to buy on terms and sell on terms, right? And that's what he talks about. But rent to own has always been our favorite. Now, there's also people who do seller financing too. Do you have anything that you recommend for that?
I'm sorry, seller financing?
Yeah.
So there's two types of seller financing. There's seller financing with the option to cash you out, and there's true seller financing. I don't care if you ever cash me out. In other words, live in the house 30 years, and I want to make my 8% interest rate that I'm going to be charging you. I'm playing bank, So on our application, one that if you register with us, there is a checkbox in there. There's two different types of seller financing. Those with the expectation to cash out within 5 years, and those with no expectation to cash out ever. And so we treat them differently from our underwriting perspective. The one that is not going to cash out ever, it doesn't matter what their credit score is, quite frankly, right? That just matters, do they have enough money really to pay the loan? But the one who is going to cash out, we have to get their credit score to where it needs to be. And they hear owner financing, and that sticks in their craw. They just think they're financing it for me. But no, there's a balloon payment, or it's anticipated you're going to cash out. So I have to treat it as a lease option. And
and that's what happens. Sometimes people say, hey, Joe, I want to try this, but let me do a seller finance where maybe you don't have to finance the property for 30 years. Maybe you put a market like 5 years where they have to now refinance and get you paid off, even though you sold to them in seller financing. So Paul's team could help if you have a lease option or if you're thinking of doing seller financing. But I want to dive into, so what's the report look like that I get back? What do you guys check for? And obviously credit and income, right? But are there anything else that you guys check?
Oh, you mean like in the criminal background piece of it?
Yeah.
That are red flags?
Yep.
Evictions, a history of evictions.
Yeah, she does the eviction report.
A history of evictions.
We've seen some doozies.
Especially more recent. If it was 15 years ago, things happen. But more recent ones, more recent criminal history.
Patterns of evictions.
Yeah, patterns.
Yeah. As far as criminal background, it's funny how all these different courts around the country enter different nuances or different elements into what they call an infraction. We've seen some pretty bar fights and marijuana smoking and things like that. That's one level, but we've seen some levels that are up there too.
Very concerning.
Yeah, very concerning. Yeah.
Mm-hmm.
And with all there's so many people now we're getting that have no Social Security number. That's a problem. There are lenders that will do deals that don't have Social Security numbers yet, So, but those are few and far between. You pretty much have to fly straight. You have to have 20% down. You have to have essentially perfect credit to get a deal done without a Social Security number.
So how would they have credit if they don't have a social yet?
They don't.
They don't.
Okay.
They don't.
Yeah.
So we teach them how to get credit, and that's not an easy task either.
Yeah, I can imagine that's got to be filled with challenges. Wow, I never
even communication is a challenge, and we spent a lot of time on Spanish to English and English to Spanish on Google.
I did one this morning.
So that we can text.
We have translators, and so we'll just use the translator and communicate to them in their native language, and the text comes back to us in English, so we can communicate that way.
Wow, technology now. It was just like when you first got started, I'm sure, right? It was just that easy.
Yeah, it's changed a little, yeah.
Mm-hmm.
Yeah, well, and I think that's the case, and this is what I was getting back to, is you got to make sure it's the right fit, because we've been doing this long enough. We've sent y'all so many applications. We've seen, I can't say we've seen it all, but we certainly,
I don't want to say that. No.
I don't want to say it, but I feel like we have, right? Because I've seen just about everything where now it makes me as a business owner have to make a decision, right?
Yeah, and another thing too is it's key to understand with our business is if they drop out of the program. Let's just say we had the coming to Jesus conversation with them. We got them enrolled in the credit repair. They're all jazzed. You're all jazzed. You took your down payment, and we're into this thing for 3 months, and all of a sudden they stop paying us, and they drop off the face of the earth, and they don't answer our text, and are ghosting us, and all this stuff. Well, guess what? We turn around and let you know.
Oh, yeah.
So that's really key to know. You want to know that sooner rather than later. You don't want to be finding that out, after the fact in court later on, that they stopped payment or they stopped your payment. So the earlier the tip off, the better. And then, we have a lot of real estate investors who we let them know, and that does this. Oh, that's not how this works. I'll call them right now.
Mm-hmm. And then they come back to us because they realize they're not getting out.
Well, and that's what's happened to us many times. We get the call from you guys saying, hey, so-and-so dropped out of the credit repair. And so now if my time frame was them getting cash out in a certain amount of time, this is why we love using your service. Now I know, and Jen knows, and we could have that conversation with our renter saying, hey, did you all of a sudden fix all your credit and you're ready to get a mortgage now? Or no, I just got behind, or, you could have that talk with them. And I think that's really important to make sure that you all stay on the same page, because communication is key to this business. And if everybody just stays communicating, whether it's good, bad, or ugly, doesn't matter, but just keeping everybody on the same page, which is key. And if we need to make some adjustments along the way, we can. And one helpful lesson I learned from you, actually, Paul, and that we implement in our business, is just because you're filling out this application doesn't guarantee that you got the house.
Right.
And so with that being the case, we have one property available right now, and we're getting some applications for. We have a second one coming up like another 30-ish days, which we'll have, I'm sure, a slew of applications for. But the name of the game is like the first person that says yes, hopefully that works out well for you, but that doesn't always mean the case. And on the current house we have now, we had somebody put in an application, had a fair amount of money down, but after I looked at the report, it wasn't a good fit. I mean, there was a lot of red flags that popped up where I just knew this was going to be a disaster down the road. So we didn't move forward with that. However, we have another renter who has their application, and that looks great. So fingers crossed that all goes well. We just got your report back. I think it was like 2 days ago.
Yeah.
And I was sharing that with our team of what they look like and how to go through it. And I think it's super thorough and laid out well, so it's easy. So if you don't have experience with reading credit reports and the criminal history and the sex offender and all the things, like, don't worry, they give it to you in a pretty easy, spelled out way. And then if you have time and you really want to go down the rabbit hole, you guys leave the whole trail. I mean, you do a very thorough job. So for $50 per applicant, you guys should be charging way more.
Yeah. Our executive summary is written for the eyes of a real estate investor. Mm-hmm. With all those things in consideration of the red flags and stuff, I would have to say, of all the thousands of executive summaries that we've written, have we ever written two that are the same? Never.
No.
Never. Every one of them is unique to that borrower. I mean, that's a customized thing. I'm not taking some form and then putting some information in there based upon a form. And remember, I'm on the phone with these people for a minimum of 45 minutes, going over their credit report. And so I get to know a lot about them. I mean, all the stuff that's going on in the background with the kids running around. I pretty much know their family by the time I hang up. So that executive summary is written with all that stuff in mind. Is this a person that has the aptitude and the attitude to pull this off?
Well, and Paul's really good at taking phone calls too when a real estate investor doesn't understand something on the report or wants a gut feel for what he experienced in the call. He'll spend time with real estate.
Oh, I would strongly encourage, for the first 2 or 3 that you send to me, call me up whenever we send the package to you. I'm always available to the real estate investors, because I'll go over that. I'll tell you even in between the lines of things that were on this executive summary. I'll let you know, just so you get a better feel of this going forward.
And Paul's the real deal there. He's serious. Him and his wife, they answer their calls. They're probably better at than me sometimes, so I apologize on that one. But my goodness, you're right there for us every step of the way.
Yeah, and I'm not afraid. I'll give you my personal cell phone number right now. use it but don't abuse it. Please don't call me at like 2 a.m. But whenever you want to call, you can call me, and all the folks that are listening in on this. You can call me whenever you send an application in, and I will go over it with you, especially that first one. And my number is 724-664-6078. So
You should give them the other one too.
yours.
412-242.
Yeah, Diane's number to reach her directly, because she'll give you all the skinny on it too, is 412-242-2733. So
Woo! So if y'all didn't write that down, you need to.
Yeah,
I will
that's
tell
a
you.
gift right there.
Yeah, because I got to tell you, you always want to talk about like your circle, who's in your village, who's making your business thrive and be better. You guys have been a huge staple in what we do and helping us make the best decisions that we can for our business. And we don't thank you guys enough. That's why we wanted to have you come on here. Obviously to say thank you, but once again, to really talk about what you guys do. And we don't have an affiliate. Joe and Jen don't get $1 for this. I don't want it. What you guys do is tremendous for not only us, but for other clients reaching out. And it's a service that is definitely helpful when you're in this business.
Well, it's needed too, so don't skip it.
Yeah. So if you're thinking about doing a lease option with somebody or doing that rent to own, whatever you want to call it, it's pretty close to the same thing. You want to make sure that you're setting yourself and your renters up for success and doing all of your due diligence, right? Don't put somebody in there who makes $17,000 a year to buy a $500,000 house. I have a feeling that's not going to work out well, right? Unless they rob a bank, and I don't advise of doing that.
No, God.
So, well, people are people. They do wild stuff. So you want to make sure you're doing the best thing you can for your business and your house, and you don't want to just put anybody in there who says, I want it, right? Mm-hmm. So do you have a few minutes for some couple of questions that we had from the audience?
Sure.
Yeah, you want to pop them in there?
Yeah. Well, we just had a shout out saying it was a very articulate presentation. So thank you for that. And then they also asked if AI could play any part in that. I was curious, are you using any AI tools? Are you?
Not yet, but it's in the works. I got a couple of things in the works. There's one thing I have right now is a rent-to-own free listings website. You can go look at it. It has rent-to-own properties, and in the future, I'm going to have people upload the properties to the rent-to-own free listings website. So that's in the works. And then we also have a new thing. We call it our pre-application for those people who don't want to apply yet, but you want to get their information to us and give us a warning that they're going to apply. And if they don't apply, you can tell us to contact them on a certain date. So our pre-app does all that. Yeah.
Nice. That's awesome. I'm excited for that. This one says, do you reach a point where they don't want to improve their credit? Like essentially become a long-term tenant that made an initial non-refundable option, but would be fine to continue to rent to own indefinitely? Or do you eventually collect a new down payment or non-refundable option after a certain amount of years?
I guess that's more for you, Joe, right?
So for us, you kind of explained a scenario that does happen. They give you that large non-refundable option deposit, and they don't really have to just try to fight through the ownership. They're just happy as can be renting. And I will tell you, we were at a seminar this past week, and Ron LeGrand was there at a real estate mastermind. And Ron says that one of his renters who did the same program was in his property for 12 years and then just moved out. And he's saying they just paid the whole property off. And then they just move out. He's like, I can't figure it out for the life of me. But I didn't go chase them down asking them why. He's like, no, you know what I'm, and Ron, he's going to put a new sign in the front yard and offer it again to another person for rent to own. So there's times where we've had people give the house back. We had 2 of those recently. One, he was in there 4 years ago and then found love, and the love of his life lived on the other side of town who already owned her own house. And he's like, I'm moving and you guys are great, but I didn't buy the house. You guys helped us with him. And then the first one, he was in there 5 years and he just moved out at the end of February. And 5 years was in the house, sent Jenn an email that I moved out end of February, like no answers to it at all. Like no, like, hey, I didn't like the house. I decided to, move to another state. Just like, nope, I gave your house back. Moved. Left the keys on the gate to the house. But the neat thing was he paid the water bill because the water bill goes with the house.
And I had a few days before, my concern being up north the winter, but he gave us a few days to get the electric back into our name and the heat bill. So people things.
Ron talks more about the golden goose, and he likes to have that golden goose lay eggs. Every month you get another check from them for the difference between the amount you get paid and the amount you got to pay, and Ron's more of it what he calls set it and forget it, which basically means like I put somebody in the property, and so in Ron's world, he's so good at this. He can get 10% down most of the time. A lot of people, especially starting out, if you get that first property and you don't have too many people applying for it, and you're making that rental payment and no one's living in there, you want to put somebody in there. You almost don't care if you take 2% down or 5% down. So I think the deal will dictate how it goes. Most times people are taking 5% down and cashing out and getting 15% on the back, 10 or 15 or even more percent on the back whenever the people cash them out. So that lends itself more to my world. Now, if you want to put them in, set it and forget it, and you're getting 10% down, Ron a lot of times says, well, I got a guy who does credit repair and leaves it at that. Doesn't even have them apply with me because he just wants to have, he's done his due diligence. They're all big boys and girls. That's kind of his philosophy. They're all big boys and girls. They can get themselves to a place to be mortgage ready. So both are correct. Both are correct based upon how much down payment and based upon what your frame of business is. So both can work, but I like it whenever you get the bigger check on the back.
I love Ron.
Mm-hmm.
I love Ron too.
All the Ron isms that he gives out to, it's worth his weight in gold. So yeah. So here's a good question.
It's kind of piggybacking off of that. So yeah, Jen and Joe, what do you do if they drop out? I'm assuming of credit repair. Do you require them to continue or just ride it out, knowing you'll probably get the home back?
So what's weird? You would think that you'd get the home back, but you really don't. Sometimes they're just in a little bit of a situation where they need to save money for a little bit, but they're going to get right back into it. So we at least want to have the conversation of seeing where their head is at that time and find out why, right? Did they decide to do it on their own, or did they have their brother know who's a credit repair genius do it for them? But we want to get an idea of what's going on. I can't be like, you have to be with Paul and Diane, or if else the deal's off. Like, I don't do that.
Right. But also really important, I think, is knowing the term length we have with the seller. So that's really like, if you have to know how long you have. And so if you have 5 years, then you bet that this person should be enrolled in this program, and that we need to stay on top of them in order for them to be able to qualify. Or if not, then they won't.
Well, you bring up a good point. Like, if we bought a house on terms, right? We bought it with seller financing, or we bought it where they have a mortgage, but we bought the property and the loan stays in their name, but the seller maybe has equity, or they just want the loan out of their name and they want you to refinance in 5 years or 6 years. Now, some we get our 10, 20, 30, raw. But the ones where they kind of give you like, I need 5 years balloon payment, or when you got to get me cashed out, well, then that whole idea, set it and forget it, does not work very well, because you don't want to wait till the end of the 4th year where now it's year 5 and they're like, oh, I'm still 6 months out from getting a mortgage. It just causes problems, right? So it is your business, but be mindful. If you do buy a house with seller financing, and if you have an unlimited term where it's a 30-year mortgage, well, maybe you don't need them to buy it out immediately. But sometimes in some of these situations that we bought where we only have a 5-year term with the seller, and in the 5-year term, I'm not going to let these people stay there for 10 years renting it. I want them to get cashed out in 2, 3, 4 years at the latest. So we're definitely more diligent with them to make sure they stay in a credit repair. If it's not this one I love. But if there's another one that for some reason, but they're doing that, then hey, whatever. But I need to make sure that we're all clear that we need to get it cashed out by this time, and that's what's important.
May I add something to that on this?
Please do.
We don't have an attitude. If someone comes to us and works a month or two with us and leaves us and says, and then they even give us a reason, maybe the reason is that they want to be their own credit repair genius, they know it all, or they have a brother-in-law or something like that who's in credit repair, and then they find out 6 months later that didn't kind of work out. We don't have an attitude welcoming them back. We say, hey, listen, here's our deal. We're going to pick up exactly where we left off. So you can go from there, and then I'm going to do another evaluation of the credit report and see whether or not they need 9 months from there, or 6 months, or 12 months, or whatever that time frame is, and we basically can pick up exactly where we left off without any attitude.
We welcome them back.
We welcome them back. Yeah, we do.
Yay.
Mm-hmm. And then, so I guess the question, so they're asking if you fill out the registration form each time there's a new house, you have different entities. That doesn't so much matter, or does it, Paul? As far as like
they're welcome to make 20 different company names if they want. I don't care. It doesn't cost them a dime.
okay.
It doesn't cost me anything more. So if they want to make one for each entity, that's fine with me. Go ahead and just fill out 12 different forms, and then use those as your link for your application on that site. And these work really well, no matter if you're using Facebook marketing or however you're marketing your houses.
Cool.
And remember, you're not the one as the investor paying for that application. Part of the link is that your renters are going to be paying the $50 per person. You're not collecting their credit card information. You're not submitting their application. They are doing that as their renter. So when you send them your magic link, all that link is going to do is notify everybody, hey, there's going to be on this application in house. And then once they do, that's where they're going to send you back your information of what they've gathered. So rather you have one, or if you got multiple LLCs and you need more, you're not paying for it out of an LLC. So I guess one would be fine, unless for some other reasons that I'm not seeing.
No, the addendum. The company appears on the addendum if they have credit repair.
We have addendums that come with a part of our package. And one of the two, we have two addendums. One of them is the debt to income ratio analysis, in which people are assigning, attesting to, these are my debts, and this is how much money I owe, or this is how much money I make. And I'm not going to materially change them between now and the time that I apply for the mortgage. And so when they sign that, you get to see that we went through all that, and that they attest to those figures. They get to see, and so it's all in the open. And whenever they sign that, now everybody knows, and even if it comes before a judge later on, they all know that you did your due diligence to test these waters out to make certain that they can afford the property. So it protects you against any sort of Dodd-Frank action from that perspective. So, and then the second of the two addendums, the one that she mentioned, is it has the name of the company on it. So if you're ABC investors one time, next one time you're XYZ investors, it will have that on there that you're going to, follow what the actions of the credit enhancement company, and that you're associated with doing business with ABC Investors Company. So it's on there too.
So if you have multiple links, you want to make sure you send the right link to the customer, because on that addendum, it's going to show the company name.
Perfect. Well. This is why we had you on, guys. You are absolute rock stars. I know we got a bunch of people watching right now that just got a ton of great information. I'm sure you're going to get a whole bunch of people reaching out to you.
Mm-hmm.
So if they do, once again, and you want to get your own specialized registration code, text register to 877-952-7979. And that's how you could have your own personalized link. So when you have a renter who's looking at one of your properties and you want to send them the special link, that's the link you're going to text them. And once they fill out that information, the report goes back to you, and then you're going to get an update from the folks here, and they're going to let you know how the procedure's coming, process is coming, and obviously it takes a day, 2 days, and then you're going to have this huge report. Now you can make the best decision possible, and that's the name of the game, guys. You want to help people make good decisions and hire the right people to help and look over your shoulder for you, so they take all the guesswork out of it. And that's why we love screenthetenant.com.
Yes, thank you so much for coming on today and sharing all of the insights of your business and just helping everybody along the way here. It really is remarkable.
Thank you so much for having us.
Jen and Joe, thank you so much for having us. All the business that you've sent us, we really appreciate it.
We sure do.
Love you guys, and looking forward to doing business with your tenant buyers, the people downstream from this, their tenant buyers, and themselves as needed.
Well, we got one right now that we got to you guys, and it looks going great, and we're going to have some more coming up really soon, so we'll be chatting a lot more very shortly. So thank you guys so much for coming on, and have a wonderful day. Oh, one last thing. Where are y'all based out of?
Oh, yeah.
We're based out of Pittsburgh, Pennsylvania.
Okay, so you're right in PA, right? So it's not like you're talking to somebody in right in Pennsylvania, so pretty awesome.
Perfect. Thank you guys so much.
Thank you guys for coming on, and we'll be talking soon. Have a great day, guys, and thanks for listening, everybody.
Thank you.
Thank you. Bye-bye.
Bye.
See you guys.